That's your money saying it's time for a McDonald's run. Because with new McValue at McDonald's, you get more than you expect. Like buy a 6-piece McNuggets and add a McChicken for just $1. Your money says let's go. Get more than you expect with new McValue. Prices and participation may vary. Valid for item of equal or lesser value.
Reality radio for a really great future. We're talking real money.
It's August, right?
Indeed.
Yeah. So we're already planning for our football preemptions.
This is the Husky pregame show starting for the game on the 31st.
I got to tell you.
Weeks away. So get ready.
I love college football.
Yes.
But I hate college football scheduling.
Yeah, it's ridiculous.
We never know. We rarely, shouldn't say never. We rarely know in advance, more than a week or so in advance, if we're going to be preempted or not by a football game. So I just wish they would. And this has got to be hard on tailgaters and things.
I agree. I wish they'd have a schedule. This is the schedule.
Yeah. But, and TV people deal with it.
I agree. Yeah. Not going to happen.
Whoever spends the money makes the call.
Yeah, there's something about money. That's right.
Money.
That's like the show today.
Wait.
Has something to do with that.
Maybe we should talk about money then.
Talking real money. Why not?
Okay. Hi, I'm Don.
And I'm Tom. That's Don.
I already said who I was.
Oh, okay. Sorry.
And and as you can probably tell, we're actually physically in the same studio, which is we can only do this about 4 or 5 times a year.
I get itchy by about 1:15.
Or there would be blood spilled.
I'm sure there's something. Isn't there a pill or something I could take to stop this? I don't know.
He's allergic to me.
I don't know what it is.
So I'm in Florida. Yeah, just,
most of the time.
You can't catch anything down the line.
Not.
So I'm in town. I'm in Seattle. Had a couple of great classes.
Yeah.
I mean, they really were. This was sort of a test class to see if this topic resonated.
And it did.
And it really did. I mean, I had people, and I don't have it very often, they come up and said, I'm so glad you gave me free tickets to come to this event.
This was the How to Make $1 Million in One Afternoon, correct?
With no risk.
No risk.
No risk.
Easy,
no risk. $1 million one day.
Yeah. Start with 2 and put it all in stocks.
No.
You'll be there quick. No? Okay.
Play the VIX indexes or whatever.
Yeah.
VIX futures.
Trade stocks. Easy money.
If you got a really bad cold, you just take a little VIX futures and rub it on your chest.
There. Next thing you know, you are really wealthy.
Yeah.
No, this was about finding 100% fiduciary advice.
And oh my gosh, is this in the news a lot?
Indeed.
We're going to talk about that a little later on. The Securities and Exchange Commission is into it. The Money Magazine just had an article about finding a fiduciary. Apparently, my class was very timely.
Yeah, you started a trend here.
And you know, the funny thing is in the class, people said, well, when are you going to teach us about these other things that, because I talked about the science of investing and income and all this, and they said, when are you going to teach us about that? And I went, coincidentally,
now that you ask,
we have a new classes coming up in September.
Mm-hmm. Which brings you to today's show.
Right.
Okay.
Right.
This is like the longest roundabout to where you wanted to get, but you're there.
We have time right now.
Okay, good work.
Go ahead. The new class, it's a new version of Real Retirement Roadmap that's got the fiduciary stuff in it, the investing stuff, and the creating income stuff.
Yes.
We're going to do it all in 2 hours.
One roadmap.
All over the Puget Sound region.
If you like the way this show sounds, you're going to like the way the classes sound.
Because we're actually going to do it together.
I'm going to take 2 pills for that one.
So, you can go buy your tickets if you want at talkingrealmoney.com.
On sale now.
Or we're going to do the same thing we did, because we had a lot of people say it was nice getting it for free. Mm-hmm. But you got to do something. We just don't give you free stuff. That's not the way life works. You have to work for everything you get in life.
We give a lot of free stuff away, but okay, we'll go with
No. But we make them work for it. We make them call in to get a free book.
On our website, we give you 2 mutual funds you could invest in absolutely free.
That's just free advice. We give that on the radio.
We have all kinds of 401k plans you could go look at.
Can I give the number?
Number 1, right?
He's in rare form today. 855-935-TALK. Give that number a call with your questions, and we'll send you to one of those classes.
And you get to talk to somebody very special today.
Oh, are you going to plug?
I can't help it.
Are you going to plug our?
We normally don't get this level of screener.
Our special screener who drove across the country with me,
all the way from Florida.
The hint is she drove across the country with me.
Let me think who that.
It's
might be.
not Rory. She has not mastered the English language or the ability to push the buttons on the phone.
She doesn't have the
She doesn't have the opposing thumb thing.
There you go. Okay.
So say hi to Debbie.
Debbie's out there. She's going to answer the calls, and you give us your name and number, and we'll give you the free tickets. And you got
to be on the show.
Oh, you got to ask a question. Yeah, and the question can be anything money related, really.
Right. It doesn't have to be about fiduciaries or
Bitcoin,
stocks and bonds. Although bonds. Oh.
Yeah, we'll talk about that. We'll also talk about inverted. We are doing this show upside down in recognition of the inverted yield curve.
No.
It's really hard to talk.
The yield curve was only inverted for a few minutes practically, or a day.
All right.
Right now the yield curve is normal but flat, so we're doing it laying down.
Okay, so it's now converted to the more traditional.
It's the horizontal version of talking real money. And please, never mind that I said that. I'm in the studio with Tom, and it just brings the
worst from you.
The whole visual just doesn't work for me. So, no, we are vertical. We are talking about money. You're invited to join us at 855-935-8255, 855-935-TALK.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
I forgot to mention those classes are going to be held in Linwood, in Tacoma, and in Bellevue, right?
Yeah, I actually have the dates and times and everything.
Yeah, who cares?
No, I do.
I
do. So one is Tuesday, the 17th of September. That is in Linwood.
Yeah.
And then the next night means you're going to have to get some rest.
I got to wait.
2 days in a row.
It's too far. It's too far in one day to go from Linwood to
Tacoma the next night, where we almost never get to the 18th, and then Saturday the 21st in Bellevue, conveniently in your neighborhood, so that you can build the roadmap for your retirement.
Real retirement roadmap. That was good.
Okay, thank you.
You practiced, didn't you?
All day in the shower.
855-935-TALK is our number, 855-935-8255. And Don, it's your turn. Welcome to Talking Real Money.
Hi, Don. We normally don't allow Dons on the show, but we'll make an exception this time.
Yeah, I'm the other Don.
Oh, other Don. Okay.
Don.
I'm a long time listener of yours. I started dollar cost averaging into low expense mutual funds about 25 years ago on your advice. I think it must be 25. But
yeah, it probably is.
What?
I'm old. Look at me.
25 years.
It's not often you get to see me, and I'm old. Look at that.
That's great.
What's up, Don?
So I have an 18-year-old daughter just going off to college, and I want to get her started in an IRA of some sort, but also she's interested in investing. She bought Lululemon way back when, and I actually sold it, but she didn't know that, but she's made a profit on it.
Yeah.
And now I want to get her investing and satisfy her interest, but do something that would teach her some advice for an 18-year-old on how they get started and make money over time.
Okay, the trick is, one, we've got to convince her that investing is not picking stocks. That's gambling. Yep. That's gambling. You may be right, but you may be wrong. Investing is more of a passive pursuit. Work, your job, that's where you're active. When it comes to investing, things should be passive. Things should be well diversified. And there are a couple of ways to accomplish that. Again, for someone young, in fact, we agree. This is one of the few things we absolutely agree on. One of our favorite things is Acorns.
Oh, Acorns. Yeah, I just talked to somebody last night about this, another young woman. So Acorns is a simple way for somebody like your daughter that might find it difficult to save because people at 18, it's not at the top of their mind.
Although his daughter, different story.
Yeah, well, but so yes, exactly. So 18, you could set up. She'd simply go to Acorns. It's an app.
Acorns.com.
Does she have a bank account?
Yeah, she has a bank account.
Okay.
She's been saving money over time. She has $6,000 in her bank account.
Fantastic.
Yeah.
So she could at Acorns she could make a lump plus. The Acorns is designed as what they call a rounding service. In other words, if you use your debit card for $1.50, they take the 50 cents out. They put it into the Acorns. They invested in a globally diversified portfolio of exchange-traded funds.
And it's actually a pretty darn good portfolio. It is really well diversified.
And does your daughter have earned income this year?
She does not have any income. I mean, probably a couple $1,000.
Well, but that's okay. Wait, that's earned income.
Yeah, if she got earned income, I would take 2 of the 6 and put it into a Roth IRA. Has Acorn set up their because they were still working on qualified or non-qualified. If she couldn't do it at Acorns, I would simply go to Vanguard.com, open a Roth IRA, that would be what she did, and move the $2,000 to the Vanguard Total World Stock Index, VT WAX, WAX. Put it all in that and leave it there. But go ahead, Don. You were waving your
And the
arms.
other thing that if she wants to, this is something I think that parents ought to do for kids. When it's their birthday, when it's a holiday that there's in which there's gift giving involved, give less stuff, give more money, but put the money into the IRA, into the Roth IRA. If she has $2,000 worth of earned income, maybe she puts $1,000 from her account, keeps more money for rainy days, and the family. You go to grandparents, you aunts and uncles, and say, if you're going to put money in, here's the account number. Put $50, $100 instead of a gift into this and give her a retirement. It's far more valuable.
So there'd be 2 things, and I would take the $2,000, put it in a Roth IRA at Vanguard, use the one fund, which is very low expense and very well diversified, and then the other, I would get her bank account hooked up to Acorns, and that starts regular saving, and it starts regular investing. Requires no discipline by the user. It simply does it for you. That's what I love about it.
Yeah, it looks like they have it now. It's called Acorns Later.
So then you could do the Roth there if you didn't want to do it at Vanguard.
Yeah.
Does that help, Don?
That does. And then does she have to have earned income to put money in an IRA?
Yes.
Yes.
And
correct.
If she made like 2,000.
That's it. Look,
She
that's great.
she can put up to however
2,000.
much she earns, up to a max of 6,000.
But in this case, since she made the 2, she could put 2,000 in there.
Perfect.
Yeah, I love it.
Okay.
That's awesome. Thank you very much.
Good luck,
Thank
Don.
you,
Thanks
Don.
for the call.
I'm just glad that one of your listeners is still alive from 25 years ago.
This is, again, why I like to
great.
just stay in my little room in Florida, far away from you. 855-935-TALK is our number. And Terry, you're next. Welcome to Talking Real Money.
Hi, Terry.
Hi, gentlemen. I have a question regarding a company. I worked for United Technologies for more than 24 years, and as the company match, they paid that in company stock. And so I'm sitting on a lot of UTC stock so that it's, a pretty high percentage of my total investable assets. And, I've just kind of left it there, and it did really well for a long time, but now they're going to be splitting into Otis, Carrier, and an aerospace division, and the aerospace division is going to be merging with Raytheon probably. So I'm just wanted some advice on, what you guys think I should do with that investment.
And this is in a this is like in a 401k?
Correct.
And my advice, and you heard it a little bit for the last caller around individual stocks, is not to own them. In fact, now I have a share of a very well-known Northwest company stock.
Oh, he's
in
so
the office.
proud of his little share of stock.
Because it came up the other day. Somebody said, "Well, I'm keeping my Microsoft stock because it's the greatest company ever."
So you rolled out your share certificate in Washington Mutual?
Yeah, Washington Mutual. I said, "Well, how about this one?" They were doing pretty well there for a while too. So no, we would, our advice, and I know Don's going to agree with me on this, would be to sell, especially if you're still employed there. I'm sorry?
I left. I left
okay.
the company 6 years ago.
Okay.
Yeah, even better.
Yeah, I would be selling the shares. Now, I mean, if it was you could dollar cost out of it. I mean, if you really if it's go to the moon.
But
or
wait,
something,
no, because it's in a pre-tax account.
Right. There'd be no reason from a taxation standpoint.
No tax reason, no other good reason. Think about this for a minute, Terry. This is really a great way of looking at it. United Technology is a very similar company in a lot of ways to one that Thomas Edison started a long time ago, called General Electric.
How did that do on Wednesday?
They could literally, it's possible, they're on the brink of bankruptcy. People said, well, it can't happen.
Did you read why, by the way?
Yeah, because
long-term care.
Long-term care.
Anyway.
But the reality is that GM went bankrupt, and every GM shareholder lost everything.
Sell the stock.
Enron went bankrupt. Delta
Washington
Airlines went bankrupt. You are so obsessed with Washington Mutual.
I was there. I lived the story. I can't help it.
To the exclusion of all these other great examples. 855-935-TALK is our number. Call the show and ask a question and get a free ticket or even two to one of our future classes coming up all over the region.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
What do you deal with more than anything else in your life? You earn it, you spend it, we hope you save it. We'd really like you to invest it properly. But the thing is money. That's why we talk real money every Saturday at this time on this particular station known as Como or on this podcast.
And if you call and ask us a question, you get a free ticket to one of the 3 upcoming
or maybe 2 if you want to bring somebody with you.
Okay, retirement roadmap classes we have in Linwood, Tacoma, and Bellevue in the middle of September. But if you call and we don't get your number,
call back.
Yeah.
Well, we have a new screener.
Well, temporary screener.
We have a new screener. She hasn't screened my show since 19.
It was like late 90s.
Hold on, 96. 5.
Okay.
Yeah.
Anyway.
She hasn't screened my show in a long time, so she's a little rusty. That's Debbie. So Don, call Debbie back.
Yeah, give her
your phone number so we can call you and get you signed up for one of the classes.
Yeah. So anyway,
that deal.
All right.
Don't want to make her feel bad.
No, she's kind enough to come out here on a Saturday.
Because I have to ride all the way back to Florida in the car with her, so I want her to be happy.
Don't make her angry till you get to about Iowa or something.
No, we're taking the southern route.
I know you are. You're going to go
next Saturday.
You're going to be down at.
I'll be broadcasting from Durango, Colorado.
That's right. Great spot.
Woo woo! Narrow gauge railroad.
You got that going for you.
Mesa Verde.
Should we go back to the phones?
Yes, we should.
Take your road trip elsewhere. Dave is next and joins us on Talking Real Money. Hi, Dave.
Hey, morning, guys.
Hello.
Or afternoon.
Good afternoon.
It goes like this. I have a question for you. Since the economy worldwide is in kind of a downward toilet full spin, and heading south.
Yeah.
Is it better to invest in bonds or gold?
That is one great question. And the answer is no. But here's why, by the way.
You notice he didn't say gold or bonds. He just said no.
Yeah, and I'm going to tell you why. Because there have been so much written in the last week about the inverted yield curve and the slowing the economy, blah, blah, blah.
Global recession.
What you need to do when everybody writes is consider the source. Now, here's a source I actually trust.
Who's that?
These are the folks at Dimensional Fund Advisors because they use academic work. Mm-hmm. They don't care
about your emotions.
They don't care about any of that. Mm-hmm. So they looked at inverted yield curves. And if you have a global portfolio, 86% of the time after the next 12 months after the yield curve, the stock market was up. Mm-hmm. 71% of the times 36 months later.
And let me add one other little interesting tidbit. The stock market anticipates things it doesn't react to. So let's assume that we do get a recession a couple of months or a year down the road. The stock market will have already built all that in advance, which is why sometimes when something bad happens to the economy, everybody sits around going, wait, how come stocks didn't go down?
Yeah, so let me add one other thing, actually, because I probably shouldn't have just said no. Your money, your investments,
reacts in knee-jerk fashion.
should be about you, not about the world. You should have the right amount in stocks, the right amount in bonds. We don't believe, by the way, in cash or gold.
Nope.
I'll let Don handle that part. But you should already have that balance built in. Our clients, for example, who we're going to see many of later today, already have portfolios constructed for good times, and by the way, it's one of the things we share at the class, and bad times. So you're not moving. There's no market timing strategy I know that works.
Well, I got to tell you, we have had over the past couple of years when the stock market was doing really well in 17, beginning of 19, and we're rebalancing clients' portfolios, and we say, oh, you got to sell your stocks and buy bonds, and they're going, Why would I want to buy those bonds? They're not going to go up. They're not going to go up. What's been one of the best investments in 2019? 9% return on bonds. Bonds can't go up any higher.
Nope.
And by the way, gold is not an investment. Gold is a pure speculation. Gold has never, ever in history become more valuable over time.
Tom and Don are talking real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Reality radio for a really great future. We're talking real money.
It's a Don, Terry, Tom kind of day today on Talking Real Money. I kind of sound like.
Did you say it with a little song in there?
Actually, what I started to sound like was Music Man.
Yeah, you did.
Music Man. 855-935-TALK. Call us. We'll talk about money. We'll try to make your life a little easier financially.
And you get a ticket to one of our 3 upcoming retirement roadmap classes, Linwood, Bellevue, and Tacoma.
Or 2 tickets.
Couple of hours. Going to be a lot. Those are going to be. This is probably the most fun classes because you and I are going to get up and do our shtick live there on stage. That's going to be kind of fun. A lot different than we normally. And you're going to get. We're going to try to give you more opportunities to ask us questions rather than us just throwing it all out there.
And it's another experiment. We'll see how it goes.
Whole thing's a experiment. Yeah.
855-935-TALK. Give Debbie a call. She's right there.
Yeah,
there's
she's doing
Debbie.
A great job. She only hung up on 3 people.
No, she hung up on one.
Okay, one.
She admitted it's a brand. It's one of these newfangled telephone systems.
Called telephone. Yeah.
And back in the days when we did the show out of Disney, it was just like the old light up push button,
boom,
click, click kind. And she goes, I said, "This is cool technology." She goes, "Well, you know me and technology."
She's struggling, but she's
a Luddite like you.
Yeah, I know. I wouldn't be able to do it.
You just barely mastered your phone, kind of like her.
Pretty much.
855-935-TALK. And the other Terry is with us. Terry, welcome to Talking Real Money.
Hi, Terry.
Hi, guys. I'm a fan of what you do, and good job.
Thank you.
You advocate to people the 2 Vanguard funds as sort of the
well, it's just simple. We can get more complicated, and we can make it a lot more difficult for you to do it. But it's just it's a little bit of a difference, that can make a big difference over time. But for most people getting started, that 2-fund solution is adequate.
Okay. Well, that's my question because, as I understand it, if a person is a client of your services, you also offer dimensional funds and this type of thing.
Our approach. Let me finish that. Yes. And the point is, if you want
have these one-word answers now.
If
yes,
you want to
no.
If you want to spend more time on this, either with an advisor or doing it on your own, you could make more money. Have made more money.
You would have made more money
because you've
had
more small cap stocks, more value stocks, more international, all those things. The idea behind the 2 funds, Terry, is just again simple.
And let me just tell you, Terry, we used to have a much more complicated version of it.
Well, you can still go to paulmerriman.com. He still has his 10-fund Vanguard portfolio. So,
yes.
Sorry, I interrupted you.
You did. You interrupted him.
Pardon me.
That is what you do by with your individual clients. Is that not some form of active management?
No.
Yes.
No.
Yes.
No, because active management implies that you are making changes as you believe the economy is changing. It's merely it's a passive approach that follows a formula. It's formulaic.
Yes.
It's based on a client's risk tolerance and a formula. We use the same formula every time. That makes it passive.
If you call dimensional funds and you ask them if they're active or passive, they will say active.
Only because they don't slavishly follow indexes, but they create asset class funds that have rules by which they invest.
It's a fine difference. In the old days, 20 years ago, we could very clearly say everybody over there was active, everybody over here is passive. That has changed. It's a little more gray today. It's a little harder to differentiate. And so dimensional does things where people say, well, wait a minute, that's not truly passive, because truly passive would be just an index. You just own the S&P 500. Dimensional does not do that. They think the research shows clearly that more smaller companies, more value, etc., and momentum, other ways to actually manage the money day to day have created greater returns. That's how I'd put it. Fair?
Well,
Okay.
yeah.
Yeah, fair enough.
I today, you see, I believe in an evolution of thinking. My thinking has evolved over my life. It's the thinking of almost everything.
Which is too bad because your best thinking was about 20 years ago.
Yeah,
but
no,
that's
I
a
think
whole
my
other thing.
current thinking is much better.
Okay.
Science evolves. Everything evolves over time as we learn new things, and I think now, by my definition, active investing is trying to predict the future. I think that should be the new definition of active investing. That if you are trying to predict something that is going to happen in the future, you are actively investing. And to my mind, what we do is not even similar to that.
And you the more clear public example of all of this is Vanguard.
Mm-hmm.
Vanguard, 3/4 of the business Vanguard does is what they're known for. Passive indexes. 1/4 is unquestionably active, Terry, because they have people buying and selling stocks. And by the way, there's a brand new study out. You can go to Money Magazine and read it that says Vanguard's only got 2 funds that have shown any return above their benchmark for a very long period of time on the active side. So
if I was Vanguard, I'd get totally out of
I don't know why they do
the picking stocks and trying to build portfolios based on their brilliance, because over and over again, the surveys say it doesn't work. 855-935-TALK. That's our phone number here anytime, 24 hours a day, 7 days a week. But if you call during the show today, you get free tickets to a future class. Call us now.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
Looks like I'm getting out of town just before the heat wave.
yeah, it's going to be back in the
80s.
Gotta like that.
Debbie reminded us that her goal was to go for a new caller record today.
How many callers can she make during the show? That's the question.
Huh?
Oh, I was thinking like callers, like police callers. Okay, no, different deal. Okay.
Oh.
You're talking about callers to the show.
Sometimes your puns are just like bad dad jokes. Just
sometimes?
Okay,
I think
always
it's
pretty consistent.
Yeah, there you go.
So give us a call at 855-935-TALK. And there's a bonus. You get a free ticket, so you don't have to pay for it, to one of our classes. And this is the class where we pretty much cover everything.
We really do.
How to invest, how to find advice, how to generate income in retirement. So we kind of toss it all in, and then we talk with you about it and get your insights. So give us a call, 855-935-8255, 855-935-TALK. My last class was about finding a fiduciary advisor, and there is a new rule, something best interest, what's it called?
B1, B2?
I don't know, best interest rules. The best interest rules coming from the SEC, and they're not best interest rules. This is so weak. This is such a weak attempt. This has been so watered down by the brokerage industry as to make it pathetic. And so the SEC, because of course we want to protect you, the consumer,
That's
the SEC
Securities
says.
and Exchange Commission, not the football conference in the South.
Jay Clayton, who's the chairman of the SEC, created these videos, and I watched all of them yesterday, and they're sad. Because what he does is he talks about the 2 different kinds of advice. There's commissioned advice and fee advice. And they both have a place. If you just want to buy individual stocks, go to a broker and pay commissions. But if you want real help building a future, so I guess, well, wait a minute, maybe it's not so bad. Maybe it's like, if you want to go to a casino, go to your broker.
Yeah, they're
and if you want to improve your life, go to a registered investment advisor. So, okay, we're good there. But then he said there are some financial advisors who are both a broker and an advisor.
A lot of them.
And he goes, and that's a good thing, because if you need individual stocks, then you can go to the broker part will help you. And if you want good advice for your future, the advisor will make that happen. That's not the way it works.
How does it really work?
Here's how it works.
Okay.
The salesperson is more interested in making money for themselves. So they'll give you some advice. And then they'll say, oh, and now it's time, and they won't say this part, but they'll switch over to the suitability standard, and then they'll sell you high commission products when they could sell you no commission products.
Yes.
They'll sell you high fee products when they could sell you low fee products. And as a matter of fact, if they were always acting in your best interest, always acting as a registered investment advisor, they would be required to sell you the no load, low fee products. But that's not what they do. They switch hats in midstream.
Merely suitable,
as opposed to best interest.
Yeah, I think that's a good way to put it. And
they didn't get rid of the merely suitable thing yet.
I don't think they ever will.
Well, because the industry won't allow it.
Exactly. I think you mentioned the key word at the beginning here. Somebody's spending millions of dollars to make sure the current system basically stays in place. Right?
As a matter of fact, when you buy, this is, I think, one of the thorns in the side of the insurance industry is years ago when they brought out variable annuities, which is an annuity product with mutual funds in it. It's a hybrid between mutual funds.
Some of the market return, but some security, if you will.
Well, and big fees. The SEC was able to take over regulation of those rather than the insurance commissions in the various states. Insurance commissions are notoriously lax in their enforcement.
They don't have the manpower, for lack of a better expression.
Plus, they tend to be a revolving door between the industry and the regulatory bodies. And
shocking.
So a few years ago, when equity indexed annuities were gaining in popularity, they're the ones where you get the returns of the market with none of the risk. Yeah. The SEC tried to regulate those too. And the insurance industry spent tens of millions of dollars lobbying to keep that regulation with their buddies, the insurance commissioners. Now, there are some states that have robust insurance commissions. New York has a robust insurance commission, but most states, it's buddy-buddy. Oh, we're not going to hurt your business.
I think the key thing here is to follow the money, right? I mean, that's what they always say. Because if you came in to see somebody, and they could either charge you, for sake of an argument, 1% a year, right? To manage your money, give you advice, make sure you're staying alive, or mention that product you just mentioned a minute ago.
Equity indexed annuities?
Yeah, and get...
Let's say 8%.
8% of the value of the annuity they put you into. By the way, which is, the client doesn't pay that. That comes from the company, right?
Oh, yeah, that's the story they tell.
I love that. I always love that.
Those of you who sell those products, you're such liars. You really are.
That's not coming from you.
You're such liars. Where does the company get the money? Come on.
But anybody, put yourself in that situation, because you're either going to make, again, for sake of an argument, thousands of dollars in an afternoon, or you're going to make a lot less than that.
Shall we put it in real numbers for a minute?
Please, go ahead.
Let's say you have $1 million invested with a fee-only advisor who charges 1% per year, and the mutual funds they have you in cost 0.5% a year.
Okay, so 1.5%?
1.5% of $1 million invested is?
It sounds like $15,000.
$15,000.
Yeah.
If you go into an equity indexed annuity with $1 million, the commission that they are paid by the company is 8%. Well, how much is that?
You can do that math.
$80,000.
Now they have to split some of that with the house, obviously. But
well, so do the investment advisors.
I'm being facetious here. So.
$80,000. And just so you know, if you go to one of these pitches by these equity index annuity guys, one of these free steak dinners, here is the question. This is the question that will tell you everything you need to know about how much money they make. Don't even say, how do you get paid, because they're going to lie to you. Just say, what's the first year surrender charge?
That their face will get red.
Yeah, because they don't think people know about that.
I think you're right.
What's the first year surrender charge? You will find that the first year surrender charge generally runs between 8 and 12%. I've seen 12% indexed annuities.
That is the amount that the salesperson receives
or
for
something darn close to it.
Mm-hmm.
So, and then, wait, here's what they'll do after that. Would you like a prediction? I know what they say. Oh, they'll go, oh, well, that surrender charge, that's just to make sure you're committed to staying in the investment long term. baloney.
Is that what they say?
Yes.
Oh, that's crazy.
That's what they say. I've been to these lunch. I love the free steak dinner. Although the last one I went to,
you said it was very disappointing.
Well, I used to love them, but the last one I went to, because I can't help but roll my eyes and make funny sounds.
Well, I didn't know that because we went out for a steak dinner on Thursday night. I should have pitched you on something. Doggone it.
Now, that was a good steak dinner.
I wasn't thinking.
It wasn't nearly as bad as the others. But here's what. I sit there and I going, yeah, sure. No. And I look at people next to me. I go, that's not true.
That's not true.
That's not true. And by the way, they're not including dividends when they show you the S&P 500.
They probably have your picture
and
up.
So this last one I went to, they didn't serve me dessert.
They said, you got to get out of here?
You don't get dessert. You messed up my pitch. You don't get dessert.
Keep the steak, though, right?
My goal, actually, if you guys would like, I'll train a few of you on how to effectively harass equity index sales pitches. And it can just be a new sport. You can get your steak and annoy them, too. Isn't that what they said in France? 855-935-TALK. Give us a call anytime.
Tom and Don are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
We know the road to retirement is long and winding and difficult and confusing, and we're here to help you figure all that out. How? Come to one of our classes coming up. Tuesday, September 17th in Linwood, the 18th in Tacoma, and the 21st in Bellevue. You will learn how to invest for retirement, how to create income in retirement, and how not to make big mistakes in retirement, which we see regularly. Plus, we'll talk about Social Security and other things. How do you do all this? You go to TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?